Hi, welcome to the Market Alert for Tuesday, the 22nd of April 2025. So gold and crypto surged during yesterday's bank holiday for the UK, and stocks purged as Trump Fed feud escalates, a classic China dumping day. And stocks fall and yields steepen as Trump ramps up pressure on Powell, wants him to lower rates ASAP. Stocks and the dollar tumbled after President Trump renewed criticism against the Fed Chair Powell. I think before long he'd be sacking him by the looks of things. But that's Trump, isn't it? That's what he does. So, he's trying to force his hand to lower interest rates, which will be interesting to see if that actually comes off. There is a problem. The Fed actually have $2 trillion waiting if the markets do continue to fall. Particularly the bond markets as well. There's plenty of videos on this on YouTube. But let's have a look at the markets from yesterday in the US and overnight, and kick off with the Dow. But just before we do that, I've just noticed we've not looked at the economic news. So let's just have a quick look at that. Today we've just got Lagarde speaking at 3 p.m. and the US Richmond Manufacturing Index. So again, there are far more important things at the moment than the general economic news. We've also got Bailey out tomorrow as well. We've got any Fed members? Yeah, we've got Waller speaking there as well tomorrow at 2:35. And anybody else for the week? No. And then just flash news. No major economic news. No CPI or non-farm payrolls. Right, let's move on. Have a look at the markets and kick off with the Dow. So in the Dow, we moved lower yesterday. We did on Thursday of last week, of course. We dropped below 40,000 in the Dow and down at 37,935. The important area is 37,510. And then if we break this, we go down to the low that you see to the left there where the buying came back in. But at the moment, we've had a dead cat bounce and the market pulling back there. And this happened yesterday afternoon as the cash market opened. Prices were hit and down they came, selling all the way there, and a bit of short covering and also buying back there. Overnight the market needs to get above the DP or stay above the DP and also the 50 EMA, but at the moment weak. If it does fall, watch the low of yesterday because that's where some buying came in, as can be seen there, and in the first hour, well, just before the close of the main cash session there. And in the German DAX, market closed yesterday and on Friday, so you can see the market gapping down there. Let's look at that in more detail in the 30-minute chart, and there's your gap there. So that's got to be made up and be filled, but at the moment the 200 MA is stopping this from happening, the market dropping there. But we'll see what happens as the market opens. The electronic session was over yesterday, market down, didn't go down with the Dow and managed to hold there from Thursday's trading session. The high, not the high, it's the close that was made. No, it's not the close either, so it must be, yes, the high from Thursday, yeah. Oh yeah, and that's the high from yesterday, so yeah, Thursday's high. Managed to trade back to that during yesterday, but they got the gap, and the gap needs to be filled there. Meanwhile, in the S&P, also pulling back, but not as much as the Dow. Still only a 50% retracement there. On the 30-minute chart, you can see the decline yesterday when the stock market opened. It'll be interesting to see if when the cash market opens, if we get continued selling today. Market are sitting on the DP overnight, and the UK doing rather well. No pullback there at the moment, but then the most famous, I would say, Chancellor of the Exchequer, Rachel from Accounts, is going to be speaking this week as well. If it's not this week, it's next week with some sort of spring budget or statement. And 30-minute chart, so you can see the market gapping there as well, but it's already filled the gap, unlike the German DAX. So once it's filled the gap, it can actually resume in the direction it gapped down. And of course, that's to break the low in order to do this. Meanwhile, the US dollar continues to collapse, as can be seen here, moving sharply lower there, and that's what Trump wants. So it's doing a great job there, as he would say. Great job, great job. That's the weekly. Let's have a look at see where we are. So we're well and truly taking out that support in the weekly chart. You can see the drop just from July of 22. We've gone from 114 now down to 98. Next level, I would have thought, was where we're currently trading. You can see some support to the left, but after that, we're going to be heading down this sort of level, aren't we? So let's just have a look, see where we are. 94 to around this area there. So we'll leave that in as a target inside of the daily charts. Let me just grab that, and there you can see the targets, which are just below there. Right, let's have a look at the metals. As I say, gold's had a really good run and had another good one yesterday. So we'll start off with gold, and as you can see, since they had that bit of a pullback there, the market's piled on the points, and overnight we have a new all-time high, and we're getting close to 3,500. We've hit amazing. I mean, I mentioned in the alert before that I thought it would take till Christmas to get to that level, but it's taken just a month. Incredible. And that's because of the instability doubt. The dollar is dying, as all fiat currencies are dying. They're only worth, I think that the dollar is worth about 3 or 4 cents now from its 1971, when it had the gold backing removed. So we've got a problem. They've got 36 trillion of debt in the US. They've got $1 trillion being printed every day, and as I said, Powell's got $2 trillion ready to save the markets. So the bailouts continue. It won't work this time. It won't work this time. It's too much at stake now. There's no chance of paying the debt. The debt has to be increased, like I say, 100 trillion every 100 days. So yeah. 30-minute gold, it's had a good run up on the Asian market, pulling back a bit there, but that's not over by a long shot. Unfortunately for silver, well, it's still struggling. Interesting volume for yesterday, though. It looks like it's set to break out. I'll show you why in a minute. And there's yesterday's 30-minute chart moving up, and then back down to the 200 MA. Classic smash down day. There's no point in putting Monday, Tuesday, Wednesday anymore. Now it's the smackdown. Tried again overnight, but the market's bounced. A bit of selling coming in there. It's just got to stay above yesterday's low in order to move higher, but it's under enormous pressure, as you'll see from the gold-silver ratio. And this is just very special. This is because I've not seen this since 2020, when we had COVID. And of course, silver in 2020 was smashed down to $13 an ounce. It's $20 higher than it was then, as we know from the current price of $33. But yeah, this is just incredible. It keeps sending it up for me, not a problem at all, because there is no way in hell that silver is going to stay down at $33 an ounce, because they're talking about the revaluation of gold now. And I've linked a video in the description for you to have a look at from Mike Maloney, and he's showing you the sort of the breadcrumb trail of how this is being achieved at the moment. And if that happens, there's just, like I say, not a cat in hell's chance that silver could stay at 33. I mean, 10,000 silver, $33, when it's been $50 in 1979, 2011, and it's currently 60% of what its all-time high is. It's a joke. It's beyond a joke. Inflation's going up. There's still the production of solar panels and everything else, and the price is suppressed. And this chart says it exactly what's going on. And as far as I'm concerned, this could go as high as it wants, and I'll just buy more, because they'd be absolutely spectacular returns. Not that that's financial advice. I just know from 2020, when I bought some ETFs, when everybody was worrying about catching a cold, bought ETFs and turned 5,000 into 25,000 in a matter of months as the gold-silver ratio dropped. So it's just a matter of time. You have to be patient. I've been patient for 30 years, but still got great returns despite the market not moving much. But then you say it's not moving much, but from $13 to $33 in 5 years is a massive return. We just know that the lid is being kept on. It's not allowed to go to its all-time high or its fair value or market value, which is over $150 an ounce. So it's just a matter of time. That's all it is. So yeah, gold-silver ratio continued to move higher. 122 is it or something? Let's just go and get the actual number so we can actually see it. There's this last month, the big spike up. And there we go. That's what we're looking for. I mean, this is just, it's insane, is what it is. So 110, 114 is the next on the target. And the all-time high that we did there, I'll just bring the chart down so you can see it. That would help. The all-time high was 126. And I wouldn't be at all surprised if we don't go to 110 and certainly attempt the sort of 114 level as well. It's looking that way. It's just going to be an absolute bargain. Absolute bargain. Right, that will do it for the gold-silver ratio. So a quick look at where we are in the market on the DAX overnight. So 2-minute chart, we've got that gap. The market's trying to make its way up there at the moment. Let me just draw in. No, can't draw in. Let me just move it over to the left and just reset the chart. So yeah, we've moved a bit lower there, and we haven't got too much in the way of fibs, no, not fibs, pivots, because obviously we've got a couple of days missing, so that'll need to be recalibrated and calculated overnight. But at the moment, finding a bit of support there. Right, that will do it for this one. Let's see what happens today, particularly in the metals markets. Are certainly gaining momentum now. And with that, have a great day, and as ever, thanks for watching. See you in the next one.